All right, welcome to the July 1st to July 5th market outlook. Let's get right into the charts. So the first thing I want to go over during this weekly outlook is the market, or is the news calendar. So this upcoming week will be NFP week. So usually on NFP week, we will tend to trade. You can trade Monday, Tuesdays, um, and Wednesdays, depending on how Wednesday trading is. Preferably, you want to be done with your trading week by Wednesday morning. So Monday, you can trade Monday, Tuesdays, you can trade Mondays as well as Wednesdays, but preferably the higher. This is based off ICT. Generally, you could trade those that first half of the week, but coming into Thursday and Friday, you would want to avoid it. And this Thursday we do have a bank holiday for July 4th, and Friday is NFP Friday. So um, yeah, you don't probably most likely do not want to be trading that day, Thursdays and Fridays. So we do have red folder news on Monday, Tuesdays, and Wednesdays. Wednesday, so we have ISM manufacturing PMI news, Jotes job openings, Fed Chair Powell speaks on Tuesday, which is something to be careful of, because whenever he speaks, he's like the Moses of the stock market. Every time he speaks, the market is tends to be a lot more volatile and very sporadic price action. And on Wednesday, we do have um, ADP non-farm employment change. So this is usually this news right here usually is released on Thursday, but because we have a bank holiday on Thursday, it's released on Wednesday. So beware of that on Wednesday. So actually, Wednesday you should Wednesday might be just avoid unless you can trade like the lower time frame models. But here, Wednesday seems to be a little bit wonky price action as well, and Friday as well. So Wednesday, Friday, I would probably avoid Wednesday, Friday. But Monday and Tuesdays, if we don't have anything like occurring when Fed Chair Powell speaks, then after he speaks and or whatever, then you can start looking for trades. But while he speaks, it is you just want to be cautious while he speaks, because prices could be very back and forth price action, or just very volatile in general. All right, let me see. Am I recording here? All right, it looks like we are recording. Okay. So next up is I do want to recap my past trades this week. Um, just a brief recap before I start this weekly outlook. So for the first trade I did take was on Monday, June 24th, 2024 of this week. It was during the New York AM session. So coming into the morning today, I noticed we took out previous week's low, which was my higher time frame objective. I then decided to only trade on the lower time frame models. So here we took out previous week's low, sorry, and we took it. We retraced back inside the range, and then we took out the low once again, and we kind of just very very expansive in both ways here. So looking at the 5 minute time frame, I noticed we had a 5 minute FEG that we were retracing into. So this is the FEG I'm talking about here. I wanted to see if prices would respect it or not, and so I wanted to see if prices would respect this 5 minute FEG on the 5 minute time frame. And based on how this 5 minute candle closed, I anticipated, hey, so we shown respect. We came off of a key level. We respected that 5 minute FEG and just wait. Based on how this candle looks, we can anticipate this candle's 5 minute high to be ran. And after seeing a bullish closure, I traded the 5 minute power of three. I went into the 1 minute time frame to see if we had any fair value gaps that would support the idea. We did have a FEG that supported the idea, but of taking out that 5 minute high. So that 5 minute high is my objective. And on the 1 minute time frame, there is a 1 minute FEG. So I set my limit order at the FEG high, and once prices retraced back into it, I took my entry. So my first trade at that week and that day ended up being a losing trade, but prices quickly closed back right above that 1 minute FEG that I was using as a PD array to target that 5 minute high. So I re-entered right as soon as we closed back above it. So I gave my trade idea 2 entries, and once we dipped back into it, I took the entry and then targeted 5 minute high. So first trade, it was kind of basically, one win, one loss. And the second trade coming into that same day, I believe, was after we left this consolidation here on the 15-minute time frame. You can see this we were just basically consolidating majority of the New York AM session, because after we took out previous week's low, the objective for that morning was completed. So like I said, only after we take out that previous week's low, I would only be trading lower time frame models. All right. So on this trade, I based my trade off of the 15 and 30 minute candle I marked out here. So after leaving that consolidation, I noticed, hey, on the 30-minute time frame, we had displacement even on the 15-minute time frame, and just seeing how this 15-minute candle closed and this 30-minute candle closed, seeing how we closed there, I could anticipate for us to run up this candle's low. And if you guys watched my fair value gap video, it explains why this fair value gap here becomes a breakaway gap. So we are most likely going to attack this candle's low before retracing back into this candle's FEG, this 30-minute FEG here. So I anticipated for prices to take that 15 and 30-minute low, and I went onto the lower time frames to find any supporting PD arrays that was in confluence with the narrative I had, which was to take out that 15 and 30-minute low I stated again. So there was a 5-minute FEG that was created that supported the narrative. At the 1:15 open, prices wicked up into that 5-minute FEG and sold off towards the 15-minute and 30-minute low. So here's the 5-minute time frame. And once we retrace back inside that 5-minute FEG, I took my entry. My stop loss, I do believe, was at a 3-minute FEG high instead of being a 5-minute FEG high, just to mitigate risk a little bit. And here's the entry on the 1-minute time frame. So at the 1 p.m. or 1:15 p.m. power of 3, we wicked up into that 5-minute FEG, targeting that 15 and 30-minute low. And notice how prices respect that 5-minute FEG's consequent encroachment. We're trading based off of this power of 3 here. So open, high, low, close. And yeah, so that's the second, well, technically third trade, because the first analysis that I did had 2 trades in it. And on that third trade today, on Monday, so I took 4 trades on Monday. And so after we sold off, like I stated here, after we sold off, we began to retrace back inside the range. Understanding that it was only a retracement back into the range, I decided to only trade lower time frame models. So I'm only trading, lower time frame models because we took off previous week's low, and I also understand that we are just retracing back inside that range. I based my trade setup on how the 15, 30 minute, and 1 hour time frame closed. So based on how this hourly close, this 30-minute closure, and this 15-minute closure, I had that narrative in mind is that hey, we're gonna probably attack this 1 hour high, rebalance this 1 hour FEG, and probably rebalance this 30-minute FEG too, and attack that 15-minute high. So with that, narrative, that objective in mind, you would go into the lower time frame models to find a supporting PD array of that objective. So on the 15, 30, and 1 hour time frame, we all had the same objective. This is, part of the concept of time frame alignment. If 3 time frames have the same objective, it is more impactful. That objective becomes more, becomes more of a clear draw of liquidity. So going into the 5-minute time frame, I see, we have a 5-minute FEG that supports the idea of us taking that 15-minute high, 30-minute high, and 1 hour high. And if you look on here, this little candlestick chart right here, this is the 15-minute time frame. And notice how we create this small little 15-minute FEG. I can anticipate for prices to attack this candle's high before rebalancing this 15-minute BISI, based off of the theory that I created on my fair value gap video on YouTube. And you can check that out on a separate video. But yeah, so my entry was at the 5-minute FEG, my stop loss is at that 5-minute FEG low, and my targets were 15-minute high, 30-minute high, and 1 hour high. So after we take out that objective, I move my stop loss to break even, and I just let my trade run. So my terminus probably would have been, rebalancing this entire hourly FEG here, and maybe, target this hourly FEG. And so we dipped back inside this 5-minute FEG about 5 times, but for the first 4 times, I didn't take that entry because it wasn't the right time. I take this entry at 3 p.m. because, like I said, I'm trading that next 15, 30 minute and 1 hour power of 3. So when prices retraces back inside this 5-minute FEG at 257, I'm not taking that entry because my model is based off of the 15, 30, and 1 hour time frame. And I have a whole separate video on how my entries are, and one of my rule states is that I can't enter any trades based on, like, if I were to take a trade based on 15-minute power of 3, I can only enter at the 15-minute interval, 30-minute interval, 45-minute interval, and 1 hour interval. And so that's my 4th trade, I believe, on Monday. And on Tuesday, so coming into that Tuesday morning, I noticed how prices took previous day low and displaced back inside the range on the hourly time frame. And we also had SMT with ES. So here on ES didn't take out previous day low. However, on NQ, we did take out that previous day low, and we had a displacement back inside that range. So with that SMT, with the ES, and that displacement on the hourly time frame, I can anticipate for us to retrace, hot, a little bit deeper into a premium on the, based off of this structure right here. So I'm seeking higher prices. So with that, in mind, I based my trade off of the 15, 30-minute candle close. So the 15 and 30-minute power of 3. So here, this is that 30-minute candle right here. So I'm anticipating for us to run this candle's high and this 15-minute candle's high. So 30-minute high and 15-minute high time frame alignment. After we, come up with an objective, I go on to the lower time frames if we have any FEGs. So on the 5-minute time frame, we have a 5-minute FEG that supports the idea of us taking that 15/30-minute high. So, and notice how I'm basing my trade off of the 30-minute time frame here. So when prices dips back inside this, FEG at 10:20, I'm not taking the entry, because if I'm basing my trade off of the 30-minute power of 3, I'm entering only on the 30-minute and the 0/0 interval. And so when prices opens up at 10:30, we dip back and set that 5 minute FEG once again, and then we target the 15 and 30 minute high. One thing I do want to note for this trade is, for me to take another trade like this, I would need to see an algorithmic signature. One of the confluences I had come into this trade that, that was like, hey, we are going to take this 30-minute high or a 15-minute high. It's just, we're waiting for that 30-minute candle closure. And notice how prices respect that consequent encroachment of that 5-minute FEG here. This to me is prices tipping its hand to us, like, hey, we're not going to run out this 15-minute high yet, but I'm gonna show you that, I'm gonna give you a little tip that we are going to take out that 15-minute high. And prices did that in a way by respecting that 5-minute FEG's consequent encroachment. I feel like that's one of it's just a theory that I have in mind. And ICT says this as well, that if we see anything like if we see this random occurrence happening, take it as prices tipping its hand to you. So basically telling you that it's going to take this high. It's just a matter of when. And when at the 10:30 power of 3, at the 10:30 new candle, that new 30-minute candle. So that was my first trade on Tuesday. I believe I do have another trade again on Tuesday. Okay, so after we take out that 15-minute and 30-minute high, we retrace back inside the dealing range. So when I say retrace back inside that dealing range here, once we take out that 15 and 30-minute high, which is right here, we retrace back inside this range, which means that we are retracing back inside the range. So we're trading back inside it. And I based my trade off of this 15-minute candle, and this 15-minute power of 3. So based on this candle, are we expecting to take out this candle's high or this candle's low? We're anticipating for us to take out this 15-minute candle's low, right? And on the lower time frames, do we have any FEGs or PD arrays that support the idea? And we do. We had a 2-minute FEG that supports the idea of us running that 15-minute low. So I believe it was at 11:45, prices dips back inside that 2-minute FEG, and we take out that 15-minute low, and we do end up rebalancing this 15-minute FEG here. So that was my second trade coming into Tuesday. So basically it was based off of a 15-minute power of 3 and a 2-minute FEG entry. My third trade on Tuesday. So on Tuesday I based my trade off of the 1 hour power of 3 again. So I actually took a decent amount of trades today on Tuesday. Here. Oh, this isn't Tuesday. This is Thursday. Sorry. Okay, so Thursday. So I based my trade off of the 1 hour power of 3. I noticed on the 15-minute time frame how we retrace back inside a 15-minute fair value gap and displace higher from it on the 4-minute time frame. So here we had this 15-minute FEG, right? And then after retracing back inside this 15-minute FEG, we had this kind of hourly closure. So based on this hourly candle's closure, we can anticipate for us to run this candle's high, this hourly high right here. It is also aligned with this 30-minute high and this 15-minute high. So time frame alignment once again. And with that objective and narrative in mind, you want to go on to the lower time frames. And like I stated, we have a 4-minute time frame FEG, so we displace higher on the 4-minute time frame. So we had that 4-minute FEG here. Once prices retraces back inside that 4-minute FEG, we can enter there and target that hourly high, 30-minute high, and 15-minute high. Once we take that high, we move stops to break even, because that is our objective coming into that trade. That is just our lower time frame objective. We aren't targeting a weekly high or a monthly high. All we're targeting is that hourly high. structure based on what price is giving us, right? So like I said, we retrace back, going back to my point I made before, when we retrace back inside this 4-minute FEG, here I'm not taking this trade because my trade is based off of, like I said, the hour, 30-minute, and 15-minute time frame. So I can only enter off of the 15-minute interval, 30-minute interval, like 45-minute interval, and the 00, basically a new hour interval. So at 3 p.m. prices dips back inside that 4-minute FEG, and I buy at that dip at 3 p.m. And notice how I am also buying below the 2 p.m. power open. So that's a power of 3 concept. I'm buying it below the open. Apply ICT only tells us about the midnight open, but if you apply that to every single candle, hourly candle, 4-hour candle, 15-minute candle, 30-minute candle, if you apply that concept, you will find a lot of success in, or you can find a lot more success in lower time frame models. All right, and with that, that is my little trade recap for this brief trade recap for this past week. So coming into this next week, keep in mind that it is the first trading week of a new monthly candle. So just based on how this monthly candle closed here, what can you anticipate just based on this monthly time frames closure? Us to take out this monthly low or this monthly high. Based on that, we can anticipate for us to take this monthly high. So let's apply that to the Dixie. So I always start my trade analysis or weekly outlooks on the higher time frame. So here on the monthly time frame, on the dollar, so we closed above a monthly SIBI here. We closed above it, so it should be trading. We should treat this as an inversion now, and we took out this monthly low here with the previous monthly candle, and based on how this monthly candle closed, can we anticipate for us to take out this monthly high or this monthly low? By now you should be answering, just looking based on how this monthly candle closed, we are anticipating for us to take out this monthly high. So what do you do after that? You want to go onto the lower time frames to find any supporting PD arrays that supports the idea of us taking that previous month's high. And so we do have a supporting PD array on the weekly time frame, which is basically this reclaimed weekly BISI. So we close back above this BISI, and we should treat it as a support level now. On the daily time frame as well, we have this little daily FEG. So I want to see prices respect those bullish PD arrays to take out previous month's high, and I want to see us complete this market maker buy model on the daily time frame. So if you can spot it out, here's the original consolidation. Here's the first stage accumulation right here. Here's the first stage accumulation, second stage, and then here's the SMR, smart money reversal, first stage, low risk buy or whatever. And I am anticipating for this first week or second week to be that second stage distribution for us to take out this buy side level here and complete the market maker buy model. But so back to what I was saying about targeting previous month's high, we have a supporting FEG on the weekly time frame and the daily time frame. So all that's left is to allow time to do its thing and for more structure to align, so we can find out when we will take out that previous month's high. So I had, based on the monthly candle and weekly power of 3, we can anticipate for prices we can anticipate for prices to attack previous week's high and previous month's high. We are trading above a weekly FEG now, so this is that reclaimed weekly FEG, and we should respect that FEG if we are to go see higher prices. There's also a 6-hour BISI, so there's a 6-hour BISI here, right here, that prices should respect if we are to attack that previous week's high and previous month's high. Alright, so coming into this week, I am anticipating for us to take out previous week's high, and the monthly objective right now, as of right now, is to take out previous month's high. With the trade structure that we do have, I am anticipating for us to take out previous month's high. It's just a matter of when will we take out that previous month's high, and we can find out when on the lower time frame. So with higher Dixie, what do you want to see on the indices? Lower, right? But if we go onto this NQ chart, we can see, hey, we're pretty bullish on NQ. Just looking at these candles with no markings, it looks like we can anticipate for us to take out, highs. Which is something I do want to be, wary and careful about, because if we are seeing higher prices on dollar, we should be seeing lower prices on the indices. However, that is not the case. So, we could be seeing, some sort of, manipulation right now. But yeah. So on NQ, we had a bullish closure on NQ on the monthly time frame. So here's that monthly candle. So based on this monthly candle here, can we anticipate for prices to take out this monthly low or this monthly high? I'm anticipating for us to create an open, low, high, close on this next monthly candle. So I am anticipating for us to run out this or take this monthly high. And based on the monthly power 3, I can anticipate for us to take out that previous month high sometime this month. And for the week, I would elect to trade lower time frame models because of the indecisive candle closure on the weekly time frame. So what I mean by that is, so on the weekly time frame, we have this little doji candle. We are respecting a weekly FEG, but after we retraced back inside the FEG, we went up and then we just shot lower again. So I feel like the algorithm was holding prices here because this high, we were saving this high for the next month, this upcoming month during July. So I want to see prices retrace back inside this weekly FEG here and respect this. So I want to see us, come back inside this FEG and continue higher. I do want to see how prices retrace back inside. If we retrace below this low, and see how we would trade there. But we could have SMT with ES, and ES could take out this weekly low and continue higher, and NQ doesn't. So we'll see. But yeah, so on the monthly time frame, I have the previous month's high as an objective. But on the weekly time frame, I just don't have any. I just can't see us attacking the high or low, because on the lower time frames relative to that weekly time frame, we don't have displacement on the to the downside that supports the idea of us taking that previous week's low. But we also are retracing back inside this 8-hour FEG here. That's that's bullish, but we don't have any bearish FEGs that supports the idea of us taking this low. So this is why I didn't mark out previous week's low as a draw of liquidity, because I can't, as of right now, I don't see any PD arrays that supports the idea of going lower on the 4-hour time frame at least. Even on the 6-hour time frame, I don't see any. We could create this new 6-hour FEG and continue lower there, but like I said, at the moment of the recording right now, there's no FEG, so maybe we could create an FEG and continue lower. But as of right now, I would elect to trade lower time frame models on NQ. for the weekly time frame. All right, and pay attention to how we trade at that weekly FEG on NQ. If we continue to respect it, we can see higher prices. So if we respect this weekly, FEG, if we respect this weekly FEG on NQ, we should see higher prices, and the draw should be previous month's high. And so moving on to ES, based on how this monthly candle closed on ES, what can we anticipate for us to take out this high or the monthly candle's low? So based off that, we can anticipate for prices to run out this previous month's high. All right, so that is our narrative, and then once we can go on to the lower time frames to see if we have any supporting ideas of us taking that previous month's high. And we do have a supporting FEG. We have this weekly FEG here that prices could retrace back inside, respect it, and then take out previous month's high. So that is what I am anticipating. Previous month's high is the draw of liquidity on the monthly time frame for ES. On the weekly time frame, however, I am anticipating for us to take out this weekly low first. So on the weekly weekly time frame, I am anticipating for us to run this weekly low, just based on how this weekly candle closed. And on the 8-hour time frame and 6-hour time frame, we could create a FEG here that supports the idea of us going lower to attack previous week's low. And once we take out previous week's low, you want to see how we trade there, and if we get some sort of price action such as this. So we take out previous week's low, create more structure, and we have a displacement back in like this. We can anticipate for us to take out that previous month's high. So weekly objective is that previous week's low, but monthly, the monthly time frame, I am anticipating to see higher prices. So with that is my analysis for the for ES, NQ, and the dollar. So to go over it once more, on NQ, our daily objective. So on Monday, I would target Friday's low of day on NQ. So NQ, I am anticipating for us to take out Friday's low of day based on how the daily candle closed. On the weekly objective on NQ, I am unclear. I just don't know. I don't know what are we going to take out. Are we going to take out previous week's high or previous week's low? I'm not too sure yet. On the monthly objective though, however, on the monthly time frame, I am anticipating for us to take out that previous month's high on NQ. And on ES, on the daily time frame, I am anticipating for prices to take out Friday's low of days, such as in confluence with NQ. So NQ, on the daily time frame, we're going to take out Friday's low, such as ES as well. And on ES, the weekly objective on ES is to take out previous week's low. And on the monthly time frame on ES, I am anticipating for us to take out previous month's high. So one thing I do want to point out is notice how we are creating a new monthly candle here. Power of 3. What do you think about when you think of power of 3? Do you think of accumulation, manipulation, distribution? All of those concepts, the open, high, low, close is a part of the power of 3. So since we are creating a new monthly candle, I am the first week, like I said, relative to that monthly candle, the first week tends to be the wick lower. And once we create that wick lower, we will then create that distribution leg up, and then we can close near the highs. But that is just an anticipation. But like I said, it's all theory. So this monthly power of 3 right here, we are trading that lower move to continue higher, if that makes sense. Like on NQ, I want to see us retrace lower I want to see us go lower to then continue higher, because we are in the first week of the monthly candle, and that first week tends to be the manipulation leg to either side if we are anticipating a bullish candle or a bearish candle. All right. So with that, I do believe that is all from my market outlook for July 1st to July 5th. I do want to shout out my Discord. So my Discord here is the invite link right. Or here's the Discord. If you want to join it, you can join it in my YouTube bio. It's all trading related. I post on my my weekly outlooks, my daily outlooks, monthly outlooks. I even I post trade recaps on there, and it's just good community to be at. And I want to grow it, and I want to ask you guys, invite you guys to embark on your journey towards your trading goals, your any financial goals that you do have. Join the community, and if we have anything in common, we can talk with each other, and hopefully we can grow alongside each other. And with that, I'm gonna call it for this video, and I'll catch you guys later in the next time. Peace out.
Watch out.